Hi there, this is Amanda Crowther from Simple Acquisitions. As a real estate investment company that partners with accredited investors, one of our goals is to communicate information about the various aspects of multifamily investing so that you can be better armed to make informed decisions about participating in this great real estate arena. Today I want to talk about exit strategies for investors and the importance of planning them before purchasing a property. As per the all-wise Wikipedia, an exit strategy is a means of leaving one's current situation, either after a predetermined objective has been achieved or as a strategy to mitigate failure. Before purchasing real estate, we determine which exit strategy will be implemented. It's a good practice to have additional backup strategies in your back pocket. We essentially decide how we are going to dispose of the property when we are ready to move it from our portfolio in order to make a profit in the process before we buy it. It's wise to have more than one exit strategy. A good investor should always think of the end before beginning an acquisition. In real estate, a plan is everything. Although it's not an exhaustive list, here are 4 common exit strategies for investors that are often executed. Each has its own advantages and disadvantages. The current and future state of the market will certainly be a pivotal factor that affects which exit strategy is implemented. So let's take a look at these 4 now. The first strategy is the flip. So these are typically the quick fix and resell of the property. They're usually single-family homes. The pro on this is that they can be a great short-term project that allows you to liquidate quickly and to work towards their next deal. The con is that you want to ensure that there's a strong enough market that will allow you to sell it quickly and for the price that you're asking. You don't want to be caught with any additional carrying costs which will eat into your profit. An additional disadvantage of a flip is that you don't benefit from the market appreciation of the property, as is usually a quick transaction. The second is a buy and hold. Purchasing and keeping a property to cash flow it over a long period of time is the essence of the buy and hold. The pro, or the upside, of the buy and hold is passive income. A good cash flowing property can go a long way to help ensure a profitable sale down the road. Other pros include tax deductions, appreciation, and depreciation. The cons? Potentially rising interest rates and the repair maintenance costs you will incur while you own the property can affect your profits. A third of the exit strategies for investors is the refinance. If your strategy is to refinance, you will want to ensure that you have a dialogue with your banker or lender to know what is required to do the refinancing and determine if it's a beneficial strategy for your property. Market conditions will directly impact the viability of this exit strategy. One of the advantages of refinancing are the possibility of lower interest rates and lower monthly payments, or it can provide cash back that allows you to reinvest elsewhere. On the flip side, refinancing does have associated costs, so make sure you do your homework. Refinancing could also mean that you'll now have some debt service, which you may not have had before. And the fourth one is repositioning. A reposition of a property is essentially bringing it up a notch. It's the rebranding of it via exterior and interior improvements to increase the class level of the property to attract more quality tenants, and as a result, achieve higher rents. For example, you change the property from a C class to a B class. One of the pros is it can be a lucrative payoff if it's done properly. Being able to increase the rent increases the value of the property and positions it in a different cap rate. On the flip side, it can be both labor and time intensive, and you need to do your homework with respect to your competitors. For example, if you have a C class property in a C class neighborhood and you try to reposition it to an A class, you may not get the tenants you want, as they may not see their surroundings as a desirable place to live. Whichever exit strategy you use, the key is to choose them before acquiring the property. If you want to minimize risks and maximize your returns, planning ahead will help for a smooth exit when you're ready to cash out. Plus, if you buy when you have potentially more than one exit strategy, you'll have some flexibility. Well, that's it for today's review of exit strategies for investors. I hope you found it educational. If you want to learn more about how getting involved in real estate can benefit you, then get in touch with us. We want to hear from you. Just visit the Contact Us page on our website at www.simpleacquisitions.com. And if you haven't already done so, visit our homepage and sign up to receive a few great videos and information about private lending and what's involved with partnering with us here at Simple Acquisitions. Now is a great time to invest in real estate, so don't delay in making your money work harder for you. Remember, Real estate doesn't have to be complicated. With simple acquisitions, it's smart, secured, and simple. That's it for me today. Thanks so much for listening, and I'll see you in the next video.